everyone. Testing, testing, 1, 2, 3. Testing, 1, 2, 3. You guys hear us okay? Thank you, Nikki. Yep. So we'll see if we maybe squeeze one impromptu one in later next week. But as of right now, this is the last scheduled Trading Pub event of the year, and I can't think of a better speaker to have here with you guys than Larry Gaines. Like I said earlier, and we said in the email, Larry's definitely one of the favorite and most popular speakers that we have here. He does an outstanding job, and as many of you guys know, most of you are options and futures and options traders, and Larry trades both, so it really fits in well with kind of what the majority of our crowd focuses on. But Larry, we appreciate you being here. He's going to take you through 5 tools for trading. He's going to talk about swing trading, and and I think one of the important things, and we mentioned this in the email, is that nobody really wants to sit at their computer all day, every day, watching the market tick by tick. And so I think that swing trading is definitely an important strategy. A swing trade is not, by definition, a day trade gone bad and held overnight. So again, that should not be your definition of swing trading. But Larry's got a tremendous amount of experience. He's a very knowledgeable guy, and he's going to take you through some really, really excellent education. You can go to find out more about Larry at www.powercycletrading.com. So again, it's powercycletrading.com if you want to kind of bookmark that page and go there. But again, we appreciate Larry being here. We are recording today's event, and we'll get a copy of the recording uploaded to our site and emailed out. We had a large number of people register for this event, and so we'll get a copy of the recording posted on our site and emailed out to everyone. All right, Larry, at this time, you can take it away. The room is yours.
Well, thank you very much, Morgan, and it's great to be here for the last webinar of the year. I feel quite honored. So again, thank you very much for having me here, and got a lot to cover. Hopefully I'll get it all covered today. And let me first start off by, I'm going to put this one link here. And I've got a couple of free ebooks if you've not received them. Please go to the homepage, powercycle.trading.com, and there's one on 15 different option strategies, and then there's another one on ebook on futures trading. So anyway, I'm going to go through today progressions of a successful swing trader, 5 essential tools. And before I get rolling here, I'd just like to put up this disclaimer. Today is purely educational only, and anything as far as stocks or futures or anything mentioned like that is not to be considered advice and should not be construed as recommendations. So this is purely educational, and I'm really excited to be here again. So here's the ebook. If you'd like to get that, just go to powercycletrading.com, put your name, email address, you'll get that free ebook. And then I've got another one that's really nice. If you need some additional help, general help on futures, this is a great ebook on trading E-mini futures. So you can get that right there on the website as well at that link I just put up. Basically, I'm also having a really fantastic holiday special, and I'll just give you that link here before we get going in case anybody has to pop off. So let me just give you the give you that link here as well. Yeah, so it's a 2-for-1. You basically get 2 of my courses for the price of 1, and you get our option trading made simple. You get a membership to my my market outlook that I put out every night, and you get 1 month in our virtual trading room. All of this $1,900 value you get for $597. So I hope you take advantage of it, and I'll teach you a great deal if you do. Just 1 second here. So here's the link. It's powercycletrading.com/special, and let's get going here. There's something, okay. Okay, so 5 essential tools. One is what my secret trading weapon, how to let winning trades come to you, how to capitalize on powerful trend breakouts, my favorite trading tools, futures, options, weekly options, and why, and how to get significantly higher returns using less capital. So first off, who am I? Who is Power Cycle Trading? I started my trading career back in the early 1980s, and over 20 years ago, I started trading newly created option contracts on cargoes of crude oil, and I traded millions of these barrels of crude oil options. So we were one of the first oil trading groups to ever trade options. And for over 10 years, I managed the International Oil Trading and Marketing Group for Transworld Oil Bermuda, which was one of the largest oil trading companies in the world. And we traded billions of dollars worth of foreign crude oil, foreign exchange, financial market derivatives, and not uncommon for us to trade over $1 billion worth of these commodities and derivatives in a single day. So learned a lot from all this this great, fantastic trading career that I had, and that's one thing that I'm doing now is passing on as much of my knowledge as I can to my members at Power Cycle Trading. During my 30 years of professional trading, I learned techniques. Yeah, the ebook link. Yes, I can put that back up. Let's see here. Here's the link for the free. There it is. So yeah, during my 30 years, I learned a tremendous amount of about trading from some really great mentors that I had in my trading career, and I learned a lot of techniques that are not commonly known by individual traders. And this led me to develop a simple but highly accurate price cycle trading system that we use for all of our trading. And it's called the Power Cycle Trading Model. And this gives our traders or an investor the ability to recognize and capitalize on the beginning of a trend rather than getting in at the end. So I founded the Power Cycle Virtual Trading Room, which we currently use, so that individuals could also improve their trading skills in a live trading environment, much like I had all over during my career. We always had large trading rooms with all the traders, in all of our offices around the world. So it was a great way to communicate trading ideas, just to communicate trades and everything else and strategies. So that's what I've created here at Power Cycle Trading is our virtual trading room. So let's see. So first off, though, it's important to understand that becoming a successful trader, or even a great trader, is a journey. There's no perfect trader or perfect system, but when you have a system that is proven, that has a high probability of success, and a mentor with over 30 years of real trading experience, your journey to creating wealth becomes much quicker and easier. So let's get started on this journey to becoming a successful trader. Now today I'm going to go through these progressions for success, and I have 5 essential tools. And this particular presentation will be geared more towards swing trading. I first started my trading educational service more for longer-term type trades because I developed a system that we currently use for longer-term trading and swing trades, but then adapted it for the shorter duration day trades. And for the past 2 years, we've been just really focused on day trading, but I've just started getting back to more and more swing trading as well. So that's what I'm going to focus on a little bit more today, and how we use the model for swing trading and use it with futures and options. So first off, if you're not really familiar with swing trading, the definition is just a style of trading that looks to capture gains in stocks or futures within a 1 to 4 day period. For swing trading, technical analysis is used to identify stocks or futures with short-term price momentum, looking at price trends and patterns based purely on technicals. Swing trading looks for stocks, ETFs, or futures that have an extraordinary potential to break out more quickly with great momentum in a short time frame. This trading requires the traders to act quickly. Therefore, swing trading is ideal for day traders or traders looking for short duration trades in order to minimize capital risk. Large institutions trade such big size and move such great amount of stocks and futures that they're not apt to use the swing trading technique. So it's really great for individual traders such as ourselves to exploit these kind of short-term market movements. And so basically swing trades are, going to be based on a lot of momentum to have the energy to carry the trade forward as quickly as possible. So some swing trades, the momentum is so powerful that you can be in the trade just for one day. But a lot of times if you get this powerful momentum for one day, it's usually going to carry through either 2 to 3 days. So that's kind of how you got that term swing trade. So first off, what I'm going to start with is the secret trading weapon, which is just basically a methodology that I've used for the past 20-25 years to start out my trading. And this is what I call the top-down market technical analysis. We started using this when I was running this trading company back in the 80s and 90s. We did this based on fundamentals, but now I do this whole top-down market analysis based on our technical trading model. So this particular analysis allows a trader or investor to analyze the market from a macro big picture all the way down to the short term or intraday. So how is it helpful? Well, top-down approach begins at the top, and the first step is to determine the big picture trend. And I do this by using our cycle model, the power cycle trading model. But if you have a good trading methodology or system that you're currently using, incorporate that with this particular type of top-down analysis, which I'll go through. Once you have a new cycle trend and you've identified it, then as an investor or trader, you can plan on how to allocate your capital. You can make a trading plan or investment plan. So it's important that you always have a plan as you go into your day trading or into your trading. You need a plan and always execute to that plan. So for example, if the trend is up, you'd probably want to be more aggressive in buying market dips and holding for greater returns. If the trend is down, you'd want to be less invested with larger cash position, more defensive with more looking to buy a short-term duration and shorter profit targets and tighter stops. So this helps you to plan. And I use 5 different time frames for this, depending on your time frame that you're trading as a trader. I use the macro trend, and I do this by a monthly time frame. The long-term market trend, I use a weekly time frame. The medium-term market trend, I use a daily. The intermediate-term market trend, I use hourly. And the short-term trend, I use minutes and ticks. Now for swing trading, we'll focus primarily on the intermediate-term market trend. We'll also look at the medium and short-term trend too, as far as helping us with our execution. So I'm just going to show you here just the current trends based on our system. That I did this in the middle of the day, so it didn't include the closing, but this will just give you an idea of what this will look like. And this is using the monthly time frame. This does not show you my trend model, but it shows you where my trend model has the trend. So here with this arrow that marks where our cycle model got in for the macro trend using the system over a monthly time frame, it's been in here since the first of the year in a macro uptrend. This kind of purple arrow showed when we're in a downtrend part of 2011, and you can see that it nailed it back into 2007 and got back in 2009 for the macro trend. So we're currently in an uptrend on the macro basis. Now for the weekly time frame, this is what I use for my long-term trend. The current trend is neutral. Now this is based on a weekly closing, so tomorrow if we close anywhere in here, the long-term trend will then go to a long-term uptrend again. So by having this trend analysis, it helps you define what you want to do. Do you want to buy pullbacks? Do you want to sell rallies? Do you want to just be neutral and just go with the flow based on your system? So right now we're neutral, so we've been taking longs and shorts, and nothing different on that. So this shows you back June 8th, it got in pretty much at the lows back there. That was June 8th of 2012. October, we had a nice move up So it really helps you as far as defining that plan. Now this is the current medium-term trend. We've been in a great cycle channel up, cycling up and down. Current trend on the medium term is up, and we use multiple time frames. I don't rely on just one time frame for my trading. So even though you see the daily with the trend arrow up, I rely on using multiple time frames. So I will also be looking at the intermediate term along with the daily in order to determine my trading positions. Here's the intermediate term time frame, which I use the 60-minute primarily. I'll also break it down to a 30-minute, 15-minute, 5-minute to help for execution of entries. You can see this is still the channel that we've been in on a 60-minute. So this is just purely the system, going neutral, going long, going short, going neutral, long, short, long, neutral, currently short. I'm not sure where it closed here today, but that's, directionally what the system looks like overlaid on this time frame. We use the same model across all different time frames and assets, and it helps us to, trade pretty much anything and everything. So 2 is how to let winning trades come to you. Now, each of these points that I'm putting out are, a course in themselves. So I'm just really kind of going through progressions of our swing trade to show you the systematic approach that we take. But there's a lot more into each part of these particular elements that go into trading. But this is to highlight it. And, if you'd like to learn more about how we do it, just join my service and we'll teach you anything and everything you need. So first off, as a professional trader, I've spent thousands of hours and dollars on trading systems, and I've used and reviewed a lot of them and developed many trading systems over the course of my career. And I've discovered that there are 5 key elements that had to be in place regardless of your trading system. And so these 5 elements are: 1, have a plan that governs all of your action. That's key. You need to have a trading plan or investment plan and treat everything as a business. Be disciplined in implementing to that plan. Learn to patiently wait for the highest probability trades based on your model or what you've chosen to use. It's important to let the trades come to you instead of chasing trades. This is a key mistake most traders will make. If you can have a system that you're confident in and depend on and feel comfortable with it, then let the trade setups come to you and don't chase them. If you miss the trade, there'll be other trades. So it's not, there'll be plenty of trades, but be patient, wait for the right setup based on whatever system you're using, and then execute. A lot of it's mental, so you need to have this structure. You need to create a structure in your trading with set goals, rules, time frames, work hours, and risk control. So if you can get disciplined, systematic about it, you take the emotions out of your trading, it'll be easier for you to execute, and you'll have greater success, and you'll enjoy your trading a lot more doing this. So these are simple guidelines, but sometimes the simplest things are most difficult to put into action. We all know that, but if you're disciplined about it and you're structured, you can do it. So first off, I recommend trading a model, if you can, or some type of system where the rules are clearly defined. This makes it a lot easier to implement your trading. The Power Cycle trading model, which we use, it's a rule-based model built around 4 indicators that define price cycle change by identifying a defined price range, price volatility, change in price cycle, change in price cycle momentum. So we have this system that can identify these based on the indicators that we use, and it helps us with our trade setups where it's mechanical, and we can kind of take our emotion out of our trades. So this provides a set guidelines which allows the trades to come to you. So whatever model you use, know your guidelines, your rules, and use them. Stick with them. Have a trading plan. Now, a trading plan can change based on your level of expertise and knowledge, but have a plan in place. So For all swing trades and day trades, I will use multiple time frames, 2 to 4 different time frames for all trade setups. And this is what I call a trade confirming process. And this really helps to allow for non-emotional trading. You saw from the previous charts, you can go back through the recording, but I'll have like the medium-term time frame is up and the intermediate-term time frame is down. So, by using multiple time frames, it helps me to execute and get into better entry position, with my trading model. So I combine these different time frames and use that for everything that we do, from our day trading into our swing trading. Same methodology, just a different duration. And this combination has created a system that has a very high winning percentage, and it makes it really ideal for swing trades and day trades. And I've done this through incorporating these 5 elements I mentioned. The end result of using these 5 elements in your trading is that you make decisions based on your model that you're using, not your emotions of fear and greed that often sabotage traders, leading you to overtrade and give back profits. So remember this: overtrade, give back profits, chasing trades. You're going to make mistakes doing that. So have a system, let your trades come to you. So this is having a good system and letting your trades come to you. These are trades I took today. I just traded the first, let's see, my trading room opens at 8 Central and it goes all day, but I was out of the room by 10 Central doing some other project work. But I took these trades all from the first hour and a half, pretty much an hour, and I called these trades out. These are unaudited, no guarantee for future performance, but I called these trades out. These are all using our trading model for day trading, and these were NASDAQ trades and one Apple weekly option trade here. But you can see 7 trades, 7 winners today. It was a great day. The system was really in sync, and that's over 45% return. This is using a daily margin of $500, so cumulative over 220 bucks per contract. Cumulative, that's based on one contract. So you can do the math. If you're trading 5 or 10, you can see how that adds up. I had other members today that did a lot better than this, and they made were $1,000 to $2,000 contract or more. Third, how to capitalize on swing trade breakouts. Now this is a key part of our swing trading methodology, and that is using momentum. And first, before I get going though, here's a really great resource for you. If you have not used this before, this will really help you screen for sector rotation and swing trade ideas. And it's called, just go to www.sectorspdr.com, sectorspdr.com. It's a great resource, and you just pull that up, and this is kind of basically what it looks like. You can, when you pull it up, what you do is you go to this little icon here, Sector Tracker, click on it, and then it'll break down the all the different industries within the economic sectors. So you'll have consumer, staples, discretionary, financial, technology, utilities, and you can screen and you can do 1 day, 5 days, a month, 2 years, 5 years. You can see where the rotation is. Is it going into consumer discretionary? Is it going into energy, or is it going into technology or out of technology? So then it gives you an idea of where to potentially go to hunt for good trade ideas and good swing trade ideas. And then you can go into each sector by itself, and it'll break it down to those stocks that make up the sector, and then you can really focus in on the particular stocks. So here's here's the technology sector. You can see Dell, eBay, electronics, and it gives you some great data to work from. And so I'll use this. I'll go through looking for different sectors that are moving or not moving, that are lagging, and then you can spot ideas. And then I'll make my favorite watch list, and I'll monitor these on a daily basis. And I'll do this for stocks, ETFs, and futures. Now this is an example. This was a couple of weeks ago, but I had this example in here because turned out to be a great swing trade setup for Google. So I was watching this particular thing, and I saw that MasterCard, was down, Google was down, and everything else in the technology sector or in this particular sector was kind of moving up. So the one that I really follow, I watch Google a lot. I like to watch high beta stocks for my swing trades because you want those that have high momentum. So, Apple, Google, Netflix, Priceline, things like that, things that have momentum that can move to get it going. So I took Google, and I'll come back to that a little bit later and show you the trade setup that I did on that. But first off, the other thing that we will incorporate for this momentum is trend lines to identify breakouts. Yeah, you can do Forex. You can do anything. I mean, there's only so many things that I can trade because, there's not enough, I'm not a hedge fund, but this particular trading model, I've worked for hedge funds. I've ran a hedge fund. This model would, be ideal for anything that you want to trade with. And I've got, Forex traders that use the model. But for the momentum part of the, breakouts, we'll use trend lines and moving averages. Now, there's a correct way to do trend lines to make it mechanical, and I'm not going to go through all the mechanics of it in this presentation because I've got a lot more to cover. But basically, we have a mechanical means to define how to draw a trend line each and every time the same way, and we've actually automated it and programmed it into our trading model. So basically, trend lines are just based on supply and demand, which dictates price movement. And the use of trend lines, and they're universally used, but the construction of them can be very dissimilar from one person to the next, causing a very subjective interpretation, and that's not what you want. You don't want it. You want it to be precise and accurate the same way each and every time. So I use rules to define the trend line pivot points, and then we can automatically draw those pivot points. We can put them in manually, or we can actually automate our system to do that, which we've done. And this incorporates also moving averages. We will incorporate that in for trend breakout and for using the moving averages also for risk management. So by using these two powerful indicators together, trend lines and also moving averages, we're able to confirm a trend breakout. We're able to establish continuation of a price trend, and we're able to use this together for risk management and profit take. So combining those two along with our cycle model, we've created a model that we can use for cycle lows and highs and for momentum breakouts. So we can identify a stock, ETF, futures, whatever, that might be coming into a cycle bottom or cycle high, and then we'll incorporate our momentum part of our system with the moving averages and trend lines to help us identify breakouts and momentums and what we call volatility squeeze. We've started incorporating, a scanning model that we have based on our trading model, and now we've got that, so we can incorporate that to identify volatility squeeze as well as cycle lows and highs. So we can set that scanner up and go through the universe of 1,000 stocks or whatever, and we can look for different volatility squeeze breakouts, cycle lows and high type trade setups. So that particular part of our scanner and stuff is based on the thinkorswim platform, but we're working on it to incorporate it to some of the other platforms, but it's based on our model. So my favorite trading tools, we specialize, and I specialize in futures, options, and I really get into weekly options quite extensively. So first I'm going to go, benefits of trading futures. One of the benefits is just our trading model works great on futures, so I like that benefit. But the overall general benefits are tax benefits. That's a whole course 60-40 rule, which could change next year, I don't know. Capital gains versus ordinary income, taxation on your profits. So that's a nice benefit. Lower margin costs, low commissions, great liquidity, great volume, great transparency on most of these future contracts. 24-hour trading, that's key to a lot of this stuff. You don't have to worry about gaps the next day. You can take advantage of volatility squeeze breakouts, which we do a lot of. And this provides you lower risk than stocks because it does reduce that overnight gap. If you're not familiar with some of the margin, here's just the E-mini ES, $400 day trading margin, $500 for NQ. So, if you're making $30, $40 a contract, you can make 4%, 7%, 10%, on your margin, on your trading capital. All you're doing is putting up that margin. So the margin really is not a cost. It's just a deposit. So it's a great way to be able to trade. So then your initial margin, you see 2,500. So we trade a lot of the NASDAQ 100 futures because it highly correlates with Apple, which is another one we trade a lot of, Apple weekly options. And we trade a lot of gold futures and some crude oil, some ES. But the really good bang for your buck is the NASDAQ 100 futures, the Russell, and gold. We found that to be excellent for what we do. So let's get into just some general facts about weeklies. They now account for nearly 12% of the 300 plus million option contracts that are traded every month. They're still kind of relatively new, but they should not be overlooked because they offer you huge trading benefits if you know how to use them. And for some more of the exciting stocks, I mean, Apple is just fantastic with the weeklies. Google could be great. Netflix, some of these high beta stocks are great to use weeklies because you can really define your risk and do a lot of really neat option spreads, which really can define and reduce your risk. So these kind of guys make up about 40% of the option volume traded now. And they come out each Thursday and they expire the next Friday. So there are 8 days for a weekly. So a lot of ways to play that, which I'll show you, highlight on a few of those. But we've also had a new addition on the November, right in the middle of November, they started adding additional contracts for these weeklies. So now on certain contracts, you can get 5 straight weeks for a group of stocks or ETFs. And this will increase as they go forward. But right now, you can get Apple. You can go out 5 weeks. So it's fantastic for trading things like that, where you have 5 weeks of different strikes to play with. So here, it's an Apple chain. Here, this was back, when November was still up. So you had November, then you had the next week, December. So you can see you have, week after week. So you don't have to go 30 days or 60 days. You can just go 1 week, the next week, the next week. So there are a lot of different ways, if you understand options, how to use this to your advantage. And that's what I'll teach you, at our Power Cycle Trading. And weeklies are cheap. Since expiration is within days, weeks, or even hours, you can purchase at the money weeklies for as little as $5 a contract to 10. So you can see that if you can get the direction right, you can get great return on your capital. They have unlimited profit potential because of this. You can make 500 to 1,000% or more on a regular basis by using weeklies. And that's contrasting that to a regular option. And they are easily traded. They have enough liquidity they're just a security. So it's just a price. It goes up and down just like the stock price or a futures price. The Thursday open, Friday close. Yeah, 8 days later. It comes in like today. We have a weekly option that just came out that expires a week from tomorrow. So it's 8 days. It doesn't expire tomorrow. It expires 8 days later. And so weeklies, they bring you 52 times a year more profit potential because you have more non-directional, directional income strategy type plays you can make versus regular options. And weeklies are for everyone. A lot of people shy away from options, and options kind of sometimes have gotten a bad rep. But all the pros use options, and there's no reason that individuals cannot adapt and use options when they want as well. And a lot of that has to do with the education. People are just they think options are too complex. but they're very simple if you keep it simple. And so at our membership, I use what I call the practical way of trading options. And this is teach option trading. This is an approach just focuses on the basics, which to me, we're using a directional timing model. So I really focus on option delta and our market timing model, which is the most important factor. So if you get the direction right, you're going to be a lot more successful than if you're just trying to play some type of volatility play, in my opinion. So I'll really focus on option delta, and I'll look at time decay as well. But option delta is one of the key. So for swing trading, day trading, again, market timing is key. And if you can get these down together and you've got a good timing system along with the knowledge of how to incorporate the weekly options, you've got a great trading advantage. So how to get significantly higher returns? Well, the biggest way to get better returns, higher returns, is to utilize your capital better. And the way to do that is either using futures, which have lower margin, or options, which have very cheap cost to them as well. So that's why, over my career, I've always pretty much focused on futures and options. And all the big, most of the big hedge funds, the big money is going to be made with the futures and options. So that's just where the money flows. So when swing trading or day trading, I like to use options or weekly options or futures. And the primary benefit is leverage at an extremely low cost. So what are the mechanics of leverage through options? I'm going to just go through that to kind of show you the basics here, just to get you an idea, and be happy to go in more detail with you at another point. But the main thing to know is the pricing, the value of an option. What is it? It's just time value times implied volatility times intrinsic or extrinsic value. And by using weekly options for day trading and swing trading, we've been able to better utilize these beneficial factors, which incorporate time decay, volatility, option delta, and this has really created for us a forceful kind of triple win formula for us to use. Now, by combining this with a good directional price cycle model or breakout system that we have, or whatever trading methodology you use, it will allow you to have some great returns on your capital. So here's the first thing that to kind of understand is your time decay, your time value, or theta, that they call one of the Greeks. And you can see this is a weekly option where you have the 8 days. So today we came out with a new weekly that'll expire a week from tomorrow, so that's 8 days. And here's 100% value, and you can see how it just tails off, very fast, very steep decline. So, it comes out Thursday, you're 100% time value. The next Friday it's at 0, so you have a decay in time every day of 1/8. So each day this thing goes nowhere, it goes down by about 12%. Your premium that you bought if you bought an option. So here's just a table to show you the same illustration. Here, when it comes out Thursday, here's a time value of 1, and then I just put in an implied volatility of a 300%. Intrinsic value kept at a constant of 1, so you can see your premium would be 300. So time value times implied volatility times intrinsic, 300. And then you can see going down, you can see how it diminishes, decays 1/8, 1/8, all the way down to 0. So you can see how that impacts this table, the math on this. If every day you're losing value based on time, then even if you have a spike in volatility like here, up to 800%, kept this constant, you really didn't get much increase on your premium. And here, you have a 500% volatility here, and your option is worth 187. Up here, you had 500%. It was on Sunday. That same option was worth, 300, almost twice as much. So by knowing how to use that, to benefit your directional trades, you can increase the return on your capital. So here's just a basic option chain. I'll just highlight this real quick. Here's the 640 strike right here. This is Apple, taking some time back, but Here's Apple 500 at 505, the bid, $105 ask. So you could buy that 640 strike for say $500. Now here's the monthly for Apple, same strike, 640, and that strike costs 1050 or 1050. So it's double the amount by going out a month. The extra time that's in this option doubles the cost of it. So that's the key that you can see, and that's how it's illustrated there. Now here's another table to show you the same thing. I'll just take this drawing pen and let's just go here. So I just did this to make it equivalent. Here's 100 shares. 100 shares. If you bought 100 shares of Apple at $640 a share, your cost is $64,000. Make $1 a contract, that's $100. Apple runs in $1 to $2 spurts, so that's a less than a 1%, 0.16%. Now, if you, instead of buying 100 shares, you bought one option contract, this was what we just looked at, a delta 50, and you bought one contract and you made $100, you make 20% because your cost of capital is only 500 versus 64. Here's the 640 strike again down here. This is the monthly option with 12 days left. And if you did that contract, that's 1,050. You make $1. It's $100 per contract. Your return on your capital is 9.52. So you can see the difference, 0.16, 9.52, and by using that weekly, you were able to get it to 20%. So that's the thing that's beautiful about it, if you can get the direction right. So here's some other examples of the leverage at a low cost. This is an Apple swing trade back on the 16th of November. This was a fantastic day for trading because we've been watching Apple and everything else to bottom out. So with our cycle model, we nailed the bottom. Our system went long right here on the 16th actually at 527.68 on a daily. So here's the Apple 60-minute. Our system went long right here at 519.39 on the 16th. That's using the 60-minute time frame with our model. And here, you could have gotten out right here at 565. That's where the model got out. So not a bad return, but if you were to use, here's the model using a 5-minute. So see, that's why I say we use multiple time frames, and the additional shorter term time frames, we use that to help our execution for entries on these swing trades. So, here's a 5-minute got in at 513. You can see here the hourly got in at 519. So using multiple time frames, it helps, with our trade execution. But the thing I wanted to show you is the difference between buying the outright shares. Here's the 60-minute. Here's your daily time frame, your 60 and your 5. So here's where our model got in: 527 on the daily, 519 on the hourly, 513 on the 5. So that's what it looked like on the underline. Now, instead of using the underline on this particular day, I was just basically day trading and doing this as a swing trade because I knew that this was just going to be a super up day. But when I combined all my trades on the day trades this particular day, I made over 200% return by using weekly options, and I made over 800 on a cumulative basis. When I combine everything that I'd done that day, just on the day trade side of it. So you can see that when you're buying an option for right here, let's see, $550, and you take it off for $650, that's $100. That's an 18% return on your capital. So it adds up fast, when you do it this way. Now, here's another example of a swing trade by holding it longer than just, that day trade. But a swing trade, like I said, can be 1 day to 3 days. So when you have tremendous momentum, you might as well just go for it, with that 1 day and hold some back over for another day or two. So here's Apple on a 60-minute time frame again. This is where our model went long. Now, instead of buying the underlying, here's if you'd bought the Apple December 14 expiration 570 calls, and those were going at this particular time for $450 a contract. And you can see here, they ended up, on the 29th, it made a high of over $28, so that's 2,800. On the 26th, it got up to over 2,600 on your capital investment of 450. So you can do the math on that. So here's what it looks like, if you analyze that position. You would have bought to open the D's 14th, 570 call at 450 per contract. On the 29th, that December 14th, 570 call was at 2,800 per 2,350 bucks per contract. That's a 522% return on your capital. And if you just done the stock outright at 520, you would have gotten out, let's say, at 590. That's a $70 return. That's a 13.5. So you can see the difference there. Now, the other thing too is that we'll do a trade analysis of this, to do our forecast of where the price will go, and that's what we teach in my swing trading course. But here's another one on Google that we did on the 27th. And here's Google. Here's a kind of a swing trade breakout analysis. Google is trading at 660. So where's Google going to be on average price range in 1 to 4 days? Typically, 2 to 4%. It's not out of the question for a swing trade move. So here's 2% for Google, 675, 3%, 680, 4%, 690. So here's just to take you through Google, what that looked like. Here's Google on the daily. Our system went long. It's based on our swing trading setup that we use, and that's in a course that I have. It's a fantastic course. I just did a boot camp 2 weeks ago on this. It was a really fantastic event, but this is basically what you would see, and here's a 60-minute time frame. Model went long, so we incorporate the intermediate term 60 with the daily and some other time frames to give us a setup signal for our swing trades. In this particular one we got for Google on the 28th of November. And then here is the 5-minute. We also will use the shorter term time frames to help us execute. And then here are the 3 together, multiple time frames. So here's your daily, here's your 60, here's your 5 using our system. And then here's what it looks like if instead of using the underlying, you replace this with the weekly options. Or in this case, actually, these were monthly options. But you could have bought at 440 the 690 call, and we'll do this forecast where it could go 2%, 3%, 4%, and then you just buy the underlying calls. So here's 440 bucks, and it went up to 1,400. That was on the set on the 27th here actually, and then this chart was on the 29th, and that's what it looked like there. So here's the analysis real quick. If you bought to open the D's 22 expiration 690 call at 440, and you risk 50%. I don't risk the full debit, excuse me. I'll risk usually 50%, so my capital at risk is really 220. Then you sold out on the 690 at 1,400. That was on the 29th. Your profit's 960 per contract. Return on capital is 208. Risk to reward ratio was 4.3. So on swing trades, I want 3 to 4% return risk to reward, and this one nailed it perfectly. Here's just another way to trade it through option spreads, reduce your risk even more. And here's this particular trade went long the 675 calls at 840 bucks, and it went to 2370 or 2,370, and then went short against that, the 690 call, to collect some income against it, reduce my cost, and that was at 440. So sold that against the call that I bought. So I had the 675, 690 call spread on, and so when it was taken off, this is what it looked like. So position, buy to open, the 675 call, paid 840 per contract. Sold to open, the 690 call, and that was a $15 spread. So put the whole debit spread on, cost me $440 per on that 675, short the 690, vertical call spread. My stop loss 50%, $200 per contract. That's what I'm going to put at risk. So if it goes down to that much, I use a three-way, three strikes you're out different setup for my stop loss. I use a fixed price stop plus my model. And so close that trade out. It made a profit of $1,530 per contract. And that was on the long leg. On the short leg, it lost 1,010. So the net profit was 520 bucks per contract. Return on the capital was 130, and the risk to reward was over 3% actually. That was not correct. So that's pretty much the basics of the way that we'll use options and futures for swing trading. But before I'm done here, yeah, usually only technicals. No, the way you have to do the fiscal cliff thing, you just have to follow your model. You have to, go with less. Don't get over leveraged, and reduce your risk by defining your risk, which I like to do through using options. So, for example, over the last week or so, 2 weeks, I've been doing a lot of different swing trades, using option spreads, and I've been able to put on option spreads for very low cost, $25, $35 a contract to $100 or maybe $200 a contract. So, you can minimize your risk that way and play these kind of uncertain times. So I will trade it that way rather than not trade. I will look at something, and if it's a great setup, then I'll take it. For example, on Priceline, PCLN on Monday, it was in a volatility squeeze based on our system. So I put on a call spread on Priceline, and I took it off yesterday for 200% return. So basically doing it that way, I defined my risk, the most I could lose by a spread, and but with the setup that I had based on our trading system, I was very comfortable that it had great momentum potential, and then I'd probably be out in a day or two, and if not, then I'll use a time frame. I'll also use that as a stop. If it doesn't go in direction of my trade within 3 days, I'm usually going to get out of the trade at wherever it is. So here's some other swing trades, but this was on gold futures back on the 6th. Our system kicked in here and here the way we do it. Here was gold futures again on the 6th of November. Gold futures here's gold futures. Here's the S&P 500. Here's a nice short setup, swing trade setup based on our system, the way I have it, our system trade with the swing trading model. And S&P futures again on the 9th. So, go short, go long, it doesn't matter. Just, we use the system. Here's a short on the system. NASDAQ 100, this was on the 26th of July. So, these are selective trades, though. It's not something that you're going to be trading every day. It's only when you see the right selective trade setup. And now we've got a screen set up for this, so we can do a lot of stuff with it. 26. So those are just some examples there. Now, today, this is today. This is one of my traders said, Larry, I'm now up. This guy was up $1,940 per contract, and that was on gold futures. And he was up $265 per contract on NASDAQ. He says, I like your program. That was Will. And this was another guy, this Doug in Atlanta. This was yesterday. He said, your power cycle model in the virtual trading room is like the gazelle and I thought this was pretty funny, bushes with night vision goggles on, as in the Geico commercial. And it's almost an unfair trading advantage. So this is a couple clues from some of the members. And if you'd like to learn more about, how we're doing it, how they're doing it, this is a great time for you to take advantage of it, because I'm having this great special. And you can get any of my 2 courses, either the day trading for options, futures, or swing trading. You can get 2 of these courses. That's a value of over $1,500. You get my option trading made simple, which will help you determine how to define what strike prices you want to buy on a call or a call spread or a put spread or whatever. That's $150 value. If you go to my website, you'll see the values there. I mean, what they cost on my site. You get my daily Power Outlook, I put this out. It's a video newsletter every day after the market, $99 a month. And the virtual trading room, you get 1 month free, $147. So the whole package is over $1,900. And right now, through the holidays, right now, if you want it, I'm going to give it to you right now for $597. And what you just need to do is go to powercycletrading.com/special, and I'll put that up on your site. Just click on this, and you can go in there and read all about everything you need to know about the courses, futures, options, and the cycle trading course. And yeah, so you can email me at support@powercycletrading.com. Yeah, the system works on Ninja. In the course, you'll get the indicators and how to set them up. Now, we've got the model set up automated with Thinkorswim because we've got my partner on this has done all the programming and coding in ThinkSwim language, whatever they call that. And it's a really fantastic setup. Let's see if I can get this. Can you guys see that? No, you can't see that. Anyway, I was trying to put my screen. I've got, oh, hold on. It's not showing up. I've got we just developed a screen for our swing trades, and we're doing a lot more on that. But anyway, if you'd like to take advantage of this, I hope you will. And basically, the Power Cycle Futures Day Trading course, you can buy one course and get the other free. So these are the 3 main courses. And the Futures Day Trading course, it's a 137-page manual, 13 videos. That's what we use for Futures Day Trading. The model's the same on every course, but it's just the time frames that we use. Yeah, thanks, Chris. Thanks, George. And then the Power Cycle Day Trading, same model, but this really covers stocks, ETFs, 109-page color manual, 20 videos, over 5 hours of video content. And this Power Cycle Trading course, this is for our swing trades. And I just did a boot camp on this 2 weeks ago. So this is totally updated, 17 videos. It's a fantastic course. They're all fantastic courses. So, if you're interested, get the swing trade course. And then if you're doing futures, get that course. Or if you're day trading stocks, ETFs, get that. You can get them both together, $597 plus the option trading made simple. It's a great way to teach you how to select your strike prices. And then you get 1 month free access to the virtual trading room, where I'm in there first part of the day, telling you what I'm doing on the trades, reviewing the trades. We have the other traders in there, and great interaction between them. Everybody's very, very good together, giving out their ideas. And then you get the daily market after outlook, which comes out daily. So it's a great package. And if you're interested in that, sign up, and I'd love to be able to teach you as much as you want to know. So any questions, please fire away, and I'll try to get it in as many as I can until we're out of time. One thing, the membership, it's all built in this package for $597, but if you continue on, you can cancel at any time. But after, after your free month, then it goes to $147 monthly on the trading room, and $99 if you want to keep that on the newsletter, video newsletter. Well, it's hard to say on the average monthly returns, but the system is very, it's a very high probability type trade system, the setups. So you're going to get really good selective trades. So you're going to have a really good return on your capital based on just the selectivity of the trades that you'll get, that'll give you. Let's see. Yes, the system identifies entry points, and then we have multiple different exit points based on the system. The average on the day trades, I mean, that's what we've been just so focused on. Our winning percentage is over 70% and even greater most of the time. Very selective. The risk reward ratio on day trades is about 1 to 1, and on swing trades I look for 3 to 4 to 1. Because a lot of my swing trades I'm using options, so I can definitely get a higher return on the risk that I put up. And I go through that in the course. I'll show you the risk reward. I'll show you the stop loss that we use. I'll show you, it's 128 page course manual with all that in there. Average number of trades per day. Well, today I did 7 trades, and I was only in the trading room for about an hour. Other members will do anywhere from 5 to maybe 20. I've got some guys that are very aggressive traders, and they'll do a bunch of trades. Yes, I am lost without the trading system. You need a system. I mean, if it's not my system, you need a system that gives you a discipline and confidence. So, I think I think the system that I've developed is a great system, so I really like it. And even if you incorporate it with something else you're using, it'll definitely give you an advantage. Weekly options. Oh, you can start out with as little as $10 a contract. I'm not being funny, but some of these things are ridiculous. You can get them really cheap. But on average, the weekly options, I'd say $100 to $200 a contract. When I'm trading weekly options on a day trade basis, I won't pay over $800 a contract. I usually like to do something within the $200 to $400 contract range. Yeah, you can learn the system by just taking the course and do your own thing. Period. That's what I've designed it for. To teach you how you can take it your own way and not rely on somebody else. It's a lot of videos, and I'm adding to it. Every time I do a video, if you're still a member, you get all the updates for free, all the videos for free. I've done a lot of videos. And yeah, in the swing trade course, the first part of the course is putting together a trading plan. The power cycle trading and day trading, the model is all the same. It's the same model of indicators that we use. The difference is the time frames that we trade and the duration. We use multiple time frames, and so that's really a big part of the course, is teaching you the multiple time frames that we use with the same trading model. These videos, they're not DVDs. I've got them uploaded to one site where you can go in there and get everything. Yes, it's your course. You can buy it. You can do whatever you like with it. There's no month-to-month, requirement at all. So once you have the course, it's yours. You can stay with the trading room or you can cancel. And then if you're a member, you can come back and, rejoin. If you've bought the course, you can come back a year later, rejoin. If you've bought the course and get the updated course. So it's a pretty good deal. So we're really working a lot on automation now. So that's, the system with ThinkScript. We've got a lot of this stuff really fantastic. Now that's an add-on. That's not in this price $597. ThinkSwim is a separate application that we've added to the model, but you can read more about that on my website if you're interested. And that was also developed by one of my charter members, one of the guys that's been with me over a year and a half now. He did all the programming on that, so he's my partner on that. And so that's kind of a separate deal, but it's fantastic. Most all of our members now have bought that add-on because it's just so dadgum good. So it's what I use in the trading room now. And if you do join, you'll see the difference. It's fantastic. Oh yeah, those trades that I showed you, those are all my own money. Yeah, so I'm a trade, kind of a trading, I don't want to be junky, but I try to be selective on my trades, and I like trading. been trading for 30 years. Yeah, the trades we can shorten the trade duration. We do it by time, and we do it by your risk reward parameters. Belgium, no problem. I've got people, a lot of people in the UK, France, Indonesia. I've had people from all over the place come in to buy the course into the trading room. I've got a number of members that have been with me over a year that are in the UK and Austria and stuff like that. Yeah, Thinkorswim platform. I have the Thinkorswim platform. I use that. I use NinjaTrader and I use TradeStation. So you can use any of the platforms. Schwab, TraderEdge. But Thinkorswim is a great one. They're all good. They can all be used. But Thinkorswim I've used because of the add-ons we've developed, and you can get their platform. They're pretty open on it. Trading room opens at 8 Central. I go through a top-down market analysis each morning to about 8:10, 8:15, and then the market opens at 8:30 Central. I'm in the trading room till all day, but I'm in there actively till 10:30 Central, and then I'll pop in and out. But I'm also working on my business and other things. And then if I see swing trades that are interesting, I've got a scanner which I show the members, and we can look at swing trades. You've got questions, you can ask them. So it's a very open trading room. Does it set boxes for? You can do that, but we don't do it because we're not. This is not an automated trading system. We're an educational site. So if you want to program the conditions of our system in and give you set boxes, you can do that. But we don't do that because we're educational really. But you can do that with the ThinkScript. So anyway, I appreciate your time being here today, and I also appreciate Morgan for everything he's done. He has put on a great service and provides a great service for everybody, and it's been great being on a part of the Trading Pub community. So appreciate you guys being here, and thank you very much, Morgan. I hope you guys have a great holiday, and I hope you'll come join me. Also, I'll be speaking at the Money Show in February. If anybody's there at the February Money Show in New York, I'll be speaking there. I'd love to meet you. If you get there, look me up. You can see me as part of the speakers there. So I look forward to hopefully meeting some of you guys there as well. All right, guys. Thank you very much.
Right,
yeah, Morgan, let's get together in New York.
Yeah, absolutely. All right, good deal. Well, thank you, Larry. Again, excellent presentation. I told you guys you were in for a treat, and I think that Larry definitely delivered. We'll get a copy of the recording posted to our website, hopefully by tomorrow morning, and we'll email that out to everyone so you can review it. The recording will be available forever. Larry, how long is the special offer available? How long is that holiday special available? Can you answer that?
It's going to be through the end of the year. So, what is that? New Year's Day, basically.
All right, good. So they got okay. So through December 31st. So thanks for that. Well, and two, when we send out the recording, we'll definitely post a copy of that link. But thanks again. I think you guys saw. You can learn, if you learn that much from Larry in an hour, what happens when you become an actual member and get to learn from him. So again, thanks again, Larry, and we hope you all have a wonderful, wonderful afternoon. Happy holidays to everyone, and we'll see you on the other side.